U.S. business spending on equipment remains resilient despite weakening labor market confidence. In a surprising turn of events, new orders for key U.S. manufactured capital goods increased by a significant 1.1% in July, surpassing expectations and indicating a strong start to business spending on equipment in the third quarter. However, this positive development was overshadowed by consumers' deteriorating views on job availability, which reached their weakest point since 2021. The Commerce Department's report also revealed that shipments of non-defense capital goods excluding aircraft, a closely monitored proxy for business spending, experienced their most substantial surge in over 2 years. This growth in both orders and shipments of core capital goods occurred despite independent surveys suggesting that businesses were preparing for rising costs due to import tariffs. However, the optimistic data was tempered by a survey from the Conference Board, which showed that consumers' perceptions of their ability to find a job were at their lowest in more than 4 years in August. Employment growth slowed to a near halt during the 3 months leading up to July, with economists attributing this to President Donald Trump's protectionist trade policy. Tim Quinlan, a senior economist at Wells Fargo, commented on the situation, stating, "Businesses cannot afford to be so sanguine about tariffs. Increased costs are difficult to pass on in the present environment, which means they must look for other ways to preserve margin. One way to do that is by keeping an eye on labor costs." Core capital goods orders experienced a 1.1% surge last month, following a revised 0.6% decline in June. Shipments of core capital goods also increased by 0.7%, marking the most significant gain since April 2023. These shipments are used in calculating the spending component in the gross domestic product report. It is worth noting that orders and shipments may have been inflated by higher prices. Throughout the year, core capital goods orders have fluctuated within a wide range, surging as businesses rush to bring in goods before the Trump administration's sweeping import duties took effect, and declining as the front-loading subsided. Despite the resilience shown in business investment, consumers are increasingly worried about jobs and future income, which could hinder spending. The Conference Board survey revealed that the share of consumers who viewed jobs as hard to get jumped to 20% in August, the highest since February 2021, from 18.9% in July. This shift in consumer sentiment could have significant implications for the economy moving forward.